just come out and say it. Shorts are getting smoked. What's up, guys? My name is Andrew. We're going to talk about spoofing and scalping, something the Department of Justice is opening an investigation into, as well as the options chain today, giving AMC another $2 million of suspicious in-the-money puts on the far right side, this time at $85 strike and $90 strike. And finally, a bounce that we called a couple of trading days ago off of the 200 EMA has now occurred again on AMC. Let's talk briefly about the winners and losers, and then let's watch until the end of the video. Slap that like button until it hits 1200. Comment out which one you are, and let's start briefly about the news. The U.S. Department of Justice is targeting dozens of prominent short-selling investment and research firms in a sweeping federal investigation that has gone on since last year, according to several reports with prosecutors probing potentially illegal trading tactics. Key facts. Federal prosecutors have seized hardware, trading records, and private communications as a part of a broad investigation into whether short sellers used illegal trading tactics to drive down stock prices by sharing damaging research reports ahead of time, the WSJ reported on Wednesday. Be very, very careful that this is going to be the crux of a further investigation into the mechanics of preventing future squeezes. The Justice Department has been collecting information on nearly 30 short-selling firms, as well as 36 individuals associated with them since late last year. Bloomberg similarly reported several weeks ago. Several of the illegal trading tactics under investigation, sources told the WSJ, include spoofing, essentially flooding the market with fake orders to drive a stock price up or down, and scalping, wherein activist shareholders cash out positions without disclosing it. Sure sounds like the amount of illegal tactics that we have been covering for months is bubbling up to the surface, and the Department of Justice has been investigating the same stuff alongside us this entire time, but we're finally catching wind of it. Several prominent short sellers have already caught up in the probe, including Muddy Waters' Carson Block. Let me just make sure I can highlight this too. Who reportedly received an FBI search warrant that extended to his phones last October. Let me make this bigger. Last October. Federal agents in early 2021 also showed up at the home of and seized computers belonging to Andrew Left, the founder of Citron Research, according to Bloomberg, which first reported the vast DOJ investigation earlier this month. Prominent firms and short sellers also mentioned in the DOJ requests for information include Melvin Capital and founder Gabe Plotkin, researcher Nate Anderson and Hindenburg Research, as well as Sophos Capital Management and Jim Carothers, including others. Let's be very clear that this is the same Gabe Plotkin that was part of the initial short on GameStop, and now we've come full circle. Okay, we have all the way come around to an investigation that is coming out soon, and we want to be able to be prepared for potential fallout when we've already talked about how easily a cascade can cause a margin call squeeze, especially since they're calling out multiple different firms, multiple different hedge funds. Now, that's the exact way that I would imagine a cascade could be set up. Short sellers have rarely been a popular group of investors on Wall Street, especially during the meme stock mania of early 2021. The likes of Plotkin's Melvin Capital were among those vilified by the army of retail traders and the Reddit Wall Street bets crowd, who are driving up the prices of stocks at GameStop and AMC. Remember, by just liking the stock and buying a stock if you like it. No one's giving any financial advice. The meme stock crowd took pleasure in causing steep losses for short sellers, forcing some to call quits altogether. Andrew Left said after the GameStop's craze that Citron would no longer publish short-selling research, for instance. On the flip side, however, short sellers can still be important in uncovering corporate scandals like Enron or Wirecard AG, for example, not to mention several like Michael J. Burry, who helped warn of the impending financial crisis in 2008. Yes, that's right. That's the Big Short. That's the Christian Bale. That's who we are talking about when we say there are ways to be able to use short selling, a Big Short in particular, for drawing important attention to unfair practices. However, right now, especially when it comes down to naked shorting, it ends up being the unfair practice that should be vilified. Crucial quote: "It's very tough to defend yourself when you haven't been accused of anything," Left told Bloomberg earlier this month. "I'm cooperating and I have full faith in the system and the First Amendment." So make sure to watch out because the DOJ has yet to accuse any individuals, but you will be first to find out. Okay, let's talk about the far right side of the options chain. A couple of videos into the gamma ramp that is already in progress, and we see these far out of the money puts. All right, so far in the money puts would be over on the left side, and out in the money put. In the money calls would be on the left side, in the money puts would be on the right side, which means these are very unlikely, right, to be out of the money because everybody would want to be able to sell AMC for $90 or $85, and then you can just buy back in really easily. You can even do an equal trade and you would make immediate profit. However, the point of the matter is who is selling and who is buying these puts on the far right side. We know that married put conversions is where we were able to test whether or not a rocket was being loaded back for potential gamma squeezes in the past. However, these are a brand new piece of unusual options activity. That's why if you guys wanted to track it, options sonar is in the description. That's what I use. Or text. Let's take a look. Another day of 100 utilization on AMC, but today barely any change on short interest, which is why we are now paying attention very closely to the options chain. So that's something that when data is, is high in one department and not so high in the other one, then it is important to be able to call out the elephants in the room and then say that data that is plateauing or staying the same is not as nearly interesting or unusual. Now, yesterday we have about 40,000 calls in the money. That's why a lot of those calls are at $20 strike. Today we have only about 29,000. However, that's still a third of a million now, getting larger every day out of the money. So more and more of these options could flow into the money by tomorrow, and that means that we have a huge show for what could happen by end of the trading day tomorrow. Understand that this was in part a collection of research thanks to the tools in the description down below. So if you guys have not used Lux algorithm to give you those buy and sell signals easily, it's good for experts, it's good for beginners, and it's 20% off with the description, as well as ChatterQuant. It's 30% off in the description. You guys have a ton of different tools at your disposal, especially to pick up this crypto dump. I would recommend crypto.com, especially since look at this, Ethereum down about 7.5% today, as well as Bitcoin. Bitcoin returning to that $40,000 level of support, right, all the way down to the 40 grand until it had a small bounce, a lift to about 500 bucks. However, that's nothing compared to what it lost today. So if you guys scoop up if you guys are looking to scoop up the crypto slump, then make sure that you guys check out not only BlockFi, but crypto.com in the description. Thanks, guys. And once again, thanks to all of you who support this show. Cannot do without you. Happy Meatball is here to be happy about it. And if you guys wanted to leave a like because it's interesting or educational, please do so. Beat the algorithm together. See you guys in the money.